Good morning, everyone, and welcome to the European crossover webinar. And we did see them reach some type of little truce on the G20 between Trump and Xi Jinping. And a bit of a disappointment here with the euro. I thought we'd really start to go and take off. And I wanted to in light of that, I wanted to let everything kind of digest itself, as opposed to doing some analysis just based on how we had opened or the first hour or so. But the big mover overall was going to be here on I think on the dollar CAD here. You can see how much this has pulled off. But in light of that, and we mentioned it last week in the chat room, is that we have the OPEC meeting coming up, and that really opened the door for them to jump up, and jump up they did, and that allowed for the dollar CAD, or the Canadian currency, to go on and strengthen. You can see here we even have a little bit of a hammer, so we're pulling back a little bit. The euro was really a disappointment. I was long over the weekend from the 13.19. I put that in the chat room, and it was really disappointing to see this open. I thought we were going to open up very, very strong. It's really a weak, feeble open. Went and jumped out, and we went and dipped a little bit lower. Then we started to work a little bit higher, but not really till we got into the European session. And we came into this level here. There's that 1372 that we've referred to, very key. You can see here a little bit of a medium or minor medium-legged doji, not even quite medium, but you can see the market, the direction is going in, generally means a pullback we did. And what we did just now, and I talked about that earlier in the session, was 13, and I said the same thing back in the Asian session, 1320 fills the gap, and that's exactly where they went to. So probably see a little bit of short covering. Some news that weighed on a little bit was these news on the Italian. I just posted that on the Italian news, that they had kind of limited the amount that they were going to do as far as go back in here. That probably just exacerbated, was able to go and allow this thing to go in and fill the gap a little bit. Italy bond yields pull back from 2-month lows after the ECB unveils new capital key with Italy share trimmed. So just a little bit to make, allow them to go in and the euro to go in and fill that gap. Although we did see a good strong open here in the equities. Kind of open I thought we were going to see out of the euro, and certainly wasn't the case. Such a bit of a relief rally. Also, we had a good open also in the Aussie. Aussie was certainly impacted by that. So we've had a decent open here with the Aussie. And cable still pushing to new lows. It looks like, it's inevitable. We'll come past this 26.94. So those, the levels on the Friday's bias chart, which was good for the Sunday open, was going to go in and hold. The real disappointment, like I said here, was with the euro, which pretty much gave up everything. Gold came up in here into this 1237. Now that 1237 was the target, but that was the target for the DEES. And remember, the February was trading at a $6 premium to the DEES, so this is basically like 1231 in the DEES. So it's not, it would still be higher. 1243 would equate to that 1237 target we've been talking about in the DEES for the gold. So basically this is just like come to 1231, and we ran out of gas here and pull back just a little bit, not a whole lot. Gold's actually held up fairly well. Dollar yen, not a huge reaction on dollar yen. I figured that they would have to. I mean, for those who are trading equities, it was a good deal because I figured Trump was going to have to come up with something, even if it wasn't going to be an outright agreement, but something. And something is what they did come up with. So those trading equities, we just definitely saw that kind of a move, and also for the Aussie too. So we'll go on and move on to the news, and we'll try and lay out, give a lay of the land. I think the dollar index, after Powell gave his thing this last week, we were looking for the dollar to pare back. I think now dollar's head, and we've had this little pop up. I think now we can start to set ourselves up for the dollar then to go on and pare back a bit from here. So I think that may be the case. And we've also filled the gap there, so it makes a whole lot more sense there. So we'll see. So it says the Australian New Zealand dollars boosted by Sino-US trade hopes and doubts. Doubts linger. The Australian New Zealand dollars touched multi-month peaks on Monday in a knee-jerk reaction to a pause in the Sino-US trade dispute, though there was plenty of caution about the prospects of lasting peace. The Aussie dollar was up 0.6 at 73.60, having sprung to a 4-month top of 73.84 in early trade. The Kiwi at about 3%, 0.3% to about 69.3 after reaching the highest in over 5 months at 69.40. The White House said President Trump told President Xi Jinping that he would not boost tariffs on $200 billion of Chinese goods on January 1st if Beijing agreed to buy an unspecified amount, but very substantial, of U.S. goods. Details are sketchy on this, noted Jared Kerr, chief economist at Kiwi Bank. The U.S. has also set a deadline of 3 months to address the thornier issues like the claims of intellectual property theft. There's doubt that these more politically sensitive issues can be addressed in a short time frame. China is the single biggest buyer of America's resource exports, and anything that threatens the demand tends to be bearish for the Aussie. A survey on Monday showed Chinese manufacturers facing declining products in November as the Caixin Market Purchasing Managers Index remained just in growth territory at 50.2. Domestic data showed Australian firms racked up record levels of profits in the third quarter, while their wage bill expanded as they took on more workers. Strength in the corporate sector contrasted with pressure on households from sluggish income growth and falling home prices. The latest report from property consultant CoreLogic showed values fell 0.9% against the major cities in November, led by losses in Sydney and Melbourne. As long as the downturn in the housing market remains divorced from the broader economy, the Reserve Bank will continue to signal that rates are more likely to go up than down, said CBA economist Gareth Aird. But the risk of negative wealth, in fact, impacting consumer spending is rising the longer the downturn in dwelling prices persists. The Reserve Bank of Australia holds its monthly board meeting on Tuesday and is considered certain to keep interest rates at 1.5%, its gradual outlook for policy. Figures on Wednesday are forecast to show annual growth in the economy slowed just a touch to a still brisk 3.3% in the third quarter. In New Zealand, the country's terms of trade fell 0.3 in the third quarter as rising prices for fuel, the country's key export, outpaced export prices. And a reef rally was starting through Brexit nerves way. But of course, like I said, we're much lower here now in cable. And like I said, we certainly didn't get the kind of reaction we would have thought for the most part across FX against the majors. A broad rally across global stocks and risky currencies lifted the British pound on Monday, although growing concerns about whether domestic political opposition will scupper a Brexit deal at a parliament vote next week capped heavy gains. Against the dollar, the pound climbed more than 0.4 to 28.24 in early trading, before trimming gains to stand 0.3 on the day at 27.96. Well, look, we are very much lower now. President Trump and China's president have agreed on a 90-day ceasefire in their trade dispute, which they will try to resolve their differences. And like I said, that's, think about as best as you could have expected, but you knew they were going to come up with something. Stephen Gallo, and a sign that the pound's gains were broadly due to a relief rally across markets rather than a major shift in market positions over Brexit negotiations. The pound was broadly flat against the euro and the Swiss franc. Stephen Gallo, European head of FX, the BMO, said the heightened chances of political uncertainty on the back of increased resistance from British politicians should pressure the pound lower in the coming days. One thing we're absolutely certain of is how much the recent pound stability belies the tension raging beneath the surface. Things are only going to get rougher from here, he said in a note to clients. Opposition parties, the small Northern Irish party that props up May's government, and many lawmakers in our own Conservative Party had said they will vote against the deal on December the 11th. Such concerns have also started bubbling up in the currency derivatives market, where 14-day implied volatility on the pound, a gauge of expected swings in the pound over the next 2 weeks, has climbed as investors have started to become betting on a more volatile pound. And on to the euro. The euro and yuan lead surge after U.S. trade war truce. The euro and Australian dollar led the rally against the U.S. dollar on Monday after Washington and Beijing agreed for a ceasefire, and the trade war was encouraged investors to sell the greenback and to buy into riskier assets. The emerging market currencies also surged higher, with Chinese offshore yuan gaining more than 1%. President Trump and President Xi Jinping had reached that 90-day ceasefire, even though it's a 90-day truce, and both the U.S. and China will need to sort out multiple issues in this period. From a market's perspective, getting past the event with a positive outcome and de-escalation of tensions is clearly positive for risk sentiment, said Mayanek Mishra. Currencies hit hard during the global trade dispute. Amid fears of potential damage to the global economy, recovered sharply. The Australian dollar rocketed 1% to 73.86. China is a bigger buyer of Australian exports, and the worry has been that any hit to Chinese demand would hurt international trade. The euro also capitalized on the dollar weakness, adding more than 0.5% to 13.79, but you can see that we've come down here and filled that gap here at 13.20. The dollar index measures the greenback against a basket of major peers, fell 0.6 to a day low of 96.71, but you can see here it's just above 97. Coming up just short of this 97.20 here on the cash dollar index. And a trade truce and budget compromise hopes push Italian yields to 2-month lows. Italy's borrowing costs fell to their lowest level in around 2 months on Monday, after 2 newspapers reported Italy is negotiating with EU to reduce its 2019 target for the budget deficit to 2% of gross domestic product or even below. News that U.S. President Donald Trump and President Xi Jinping agreed to halt tariffs during talks in Argentina on Saturday, following months of escalating tensions on trade and other issues, fueled demand for risk assets. That in turn dented safe haven German debt, with 10-year yields pulling away from more than 3-month lows hit last week. In contrast, short-dated Italian bond yields tumbled 12 basis points. Italy's bond market has bounced back in past 2 weeks on signs that the country's anti-establishment government is willing to reach a compromise with the European Union over its budget plans for next year. In a response to a question about whether Italy is negotiating a deficit to GDP ratio reduction to 2% or 1.9% from the present target of 2.4, La Repubblica Daily on Monday quoted Italian Finance Minister Giovanni Tria as saying, yes, these are the figures. 10-year yield Italian bonds yields fell 6 basis points to a 2-month low at 3.15%. That narrowed the gap over benchmark German bund yields to around 279 basis points, its tightest in 2 months. The Italian government does seem to be keen to get a compromise and thus helping the risk move towards BTPs today, said Martin Villet, a senior strategist at ING. And if you look at the sell-off in German bunds, it's clear they're being hit in the double whammy of the trade truce and Italy. Yields on the higher-rated bonds, such as the Netherlands and France, were also higher as easing trade tensions boosted stock markets in Europe. Oil prices rallied 5%, and the euro strengthened. In a meeting lasting 2.5 hours at the weekend, the United States agreed not to raise tariffs further on January 1st, while China agreed to purchase more agricultural products from U.S. farmers. Elsewhere, Spanish yields were flat, showing little immediate reaction to the political developments. Spain's far-right Vox party won 12 seats in the election in Andalusia on Sunday and could end up as a kingmaker in the region. Obviously, there's a little bit of concern here for the euro in that sense. And lastly, with gold scales over a 3-week peak as the dollar slips. Gold prices hit a more than 3-week high on Monday on a weaker dollar as a trade ceasefire between the U.S. and China revived investor demands for riskier assets. Washington and Beijing agreed to halt the additional tariffs in a deal that keeps the trade war from escalating as the two sides again to bridge their differences with fresh talks and reach an agreement within 90 days. The dollar has edged up from its high, supporting gold, said Harish V., head of commodity research at Geojit, adding that the market would keep a close eye on what U.S. and China intend to do during a 90-day ceasefire. The U.S. currency has been the preferred safe haven this year as the China-U.S. trade war unfolds, a backdrop against higher U.S. interest rates. However, the greenback came under pressure last week as Fed Chair Jerome Powell said interest rates are just below neutral, raising expectations that the U.S. Central Bank is close to the end of its rate hike cycle. The over-pessimism and bullion space on account of interest rate moving up is overdone, and this is the right time to accumulate gold, said Kunal Shah, head of research at Namal Bang Commodities. Gold tends to gain when the rate hike expectations recede because the lower rates reduce the opportunity cost of the non-yielding bullion. If the Fed is worried about the growth and market and makes it known more clearly, then the market could possibly see a further boost to gold, said John Sharma. Powell is scheduled to testify before a Congressional Joint Economic Committee later this week. Analysts see the yellow metal support in the near term on political and economic risks, such as uncertainties over Brexit and Italy's budget and the recent unrest in Paris. So with that, we'll go in and move into the bias chart. As I said, I thought it was more important to have let some of these moves digest themselves as opposed to just reacting as to what they did in the after the open. Like I said, certainly, I mean, Australia reacted, and this was going to be the biggest one that had the most opportunity here as far as its reaction. But certainly the euro, like I said, to me, I thought was going to open up and try and push this 1420, and it was really a rather quiet open. So here's that 1320 we talked about. We actually just went to the 1320, and I thought that this was a good area here, and I had got long at 1390. I thought we could really bounce, you know, and we had the asterisks here because that's a huge daily level, but, you know, certainly this didn't expect it to run out of gas in this 1372. The key would be now that we've come in here and we filled the gap, we'll see if we can. I think we filled the gap, and I think that going forward, we'll probably look to see the dollar start to ease back a bit. I think you want us to wait till as we get into New York session, give you a good idea. Powell's going to be speaking, but he's already kind of eased back a bit on the whole dollar thing. So I think that probably the dip down here initially this morning is going to be right here. The risk, if we were to take a dip lower, I mean, I think we may just come down here and test this, but really I think this whole area is going to be a good area to start to accumulate. The risk here, I was thinking about that 1308 that's going to be your risk level, I believe, right there. It's 1298. 1298. So if you accumulate, that's where you know what. I don't think we're going to turn around and start heading south. So it's going to be 1298. We'll call it just be right there. 97. We'll call it 1297. Although I'd be surprised if we can get much beyond even 1308. We've come here, filled the gap, and really, although this rally was a bit feeble, it really was. even, I mean, this, when we opened up the session, this was really terrible looking, but we finally climbed up here in the European session, but quickly kind of gave it back and started to slide. So they may want to test even a little bit further. Really, I think anywhere down in here, it's really this 1308, and they may just take this out just a hair just to test and see what's made of. I'll go with 1297 as a support. But after backing down a little bit, I think you have to figure that with Powell, you're going to see a little bit more in his talk later on this week. And really, I just think it's going to, I believe, it'll just be probably almost like an evening up of positions, so to speak. I think that there are probably those that thought, oh, you know what, no matter what, it's still going to be Trump's going to do this, they're not going to resolve it. So I think on this last run up here, this gives a good opportunity for anybody this long to lighten up their load here. So once again, if the euro comes down to around the 1298 or test, we'll probably fill in this little area here. And then I think, and 97.31, so that I think at that point you can start to see the dollar ease back. Doesn't mean it's going to fall all apart, but I think you can start to see positions being lightened up. Certainly gold has its own belief on this. So now let's go as far as the resistance. On a short-term basis, it would certainly be right there at 1368. We'll keep it here at this 1372, although, you know, if we can start to get things turned around, the key will be, you know, right there at 1396. But first things first, for now, it's going to be this 1372. And for now, it's going to have to be range, which is a bit of a range for right now. I think they're going to have to come down here and test a little bit, and then if they don't find any new selling, then I think we have the opportunity for the dollar then to start to pare back ahead of Powell's thing between that joint economic committee. Let's move on to the cable. We'd really open this lower in case we saw, you know, real negative reaction because the cable was already on its back foot. But right now, before we had made that move, we were talking about 2682, and then we'll just go with that, 2682. Here's that 2694 we talked about. We thought since early last week, we thought we're going to eventually get there. It looks like we are. So we'll just put it at 2682. That's 63 right there. 26. I'll tell you what, right there. 2670. Let's just call it 2670. Push a little bit lower. But certainly it looks like this thing's going to open up. Eventually you want to go to 2564, but we'll say 2670. For now. And the upside, you have to wonder, is there any actual upside? Well, we certainly saw a little bit of a bounce, but boy, it quickly ran out of gas. You can see right there where it stopped. You see right there, the little body right there, right here. There you go. And you see, that's what ran out of gas there. 28.22. So on the upside, boy, it's going to be pretty tough for them to get beyond here. It's going to be right there, that 27.93. updated this new phone, and now it's making all kinds of noises. So 27.93. And certainly it's got this bearish tilt. That's not changing anytime soon. It really, things really look tough on the cable. It really does. Probably a pretty obvious statement, but it just can't get a lift to save its life. And you can see here, this bar engulfed it right here and opened the door for us to push lower right there. You can see that. Can't have missed it. Let's now go and move into the Aussie. Now, this was, the big winner for the most part. Certainly was the beta choice, but if it didn't play out, you could certainly have gotten hurt quite a bit. But to me, it seemed like Trump was going to have to offer something, and I think that was, probably didn't want to offer much, but the true thing gave something for the markets, and I think that was important. So we jumped up in here. Let me see what we had. We had 73.98 on the stretch right here. And we made it to 73.94. I wasn't bad. I was off by 4 pips. Or 5 pips. Anyway, the key level for right now, before I think we'll see a reaction, I think eventually there's still the opportunity for eventually probably come up here and touch this range. But I think a quick little jump up here, you'll probably see a little bit of laying off. Good area is going to be 74.18, which isn't a whole lot higher, but it's already had a pretty good little run. So go 74.18. But if you look at the top of this range, look at that, 74. That's where the probably eventually want to go to. If we can get this dollar to ease back a bit, that may come later on the week after, with Powell. But for right now, it's going to be 74.18. And for support, we'll go right here with the 73.20 right here. There'll probably be a little bit of support right in here. You see 73.28, but no, I'm going to go with this 73.20 is where they can go and move. It's probably going to even have a tough time. If they go here, I think they're going to be trying to accumulate it right there, but 73.20. And let's go move into the Kiwi. And be just one moment. Let me step away real quick. Okay, and we're back. And let's take a look here with the Kiwi. We've been talking about the 68.45. Boy, this Kiwi has really reacted very, very well. We had on a resistance here. I don't know what I came up with this 60.37 here. So let's take a look back here. Did make it up here to the 69.18 level here. It's going to be the top of this range here, 69.60. This is a good level here, but once again, just like the Aussie, if they want to jump up, this is going to be a very good level here, the 69.60. Look at that coming across. And let's take a look at it on the fib. Well, 69.31 is the 50%. So it was already a good little reaction. But if they want to hit some stops, we'll go with the 69.60, which is the real good level here. So we'll go with 69.60. And for support, well, you can see here, it's this key level, that 68.45. I don't think they're going to get much below that, and that'd be 68.37 right there, 68.37. And certainly bullish here. Look here in the Kiwi. Very big deal for it to close up, if we can close above 73.69 on this daily. My thinking is, like I said, I think that we'll start to see the dollar start to now gently start to go on pair back. We might start to see the first step of it here in the U.S. session. So just keep that in mind. For those that thought that maybe nothing was going to happen, this gives them an actual opportunity to actually get out and take advantage of that. So I don't think the dollar's going to ascend much higher. And then when you look at Powell speaking, I think looking out going forward over the week is going to be an opportunity to start to take some positions against the dollar, and could start as early as, which I believe is at, U.S. session. Let's go and move into the dollar CAD. Certainly this was impacted quite a bit by the huge fall that we'd seen in crude oil, but you've seen a little pop up here, and we're able to go on and get just above this area. Let's pull this up. Right there, 52.29. That opened the door for them to make a little bit of a boost here. And the Canadian currency was already diverging to start with, because as crude oil kept going lower, the dollar CAD, we got this one little pop up in here, but as it moved, made another step, remember below sub 50, we actually saw the Canadian currency not make a new high, and we started to work a little bit lower. And certainly this was one of the big movers too, along with the Aussie. and Kiwi. But this was helped in part by what we saw in the crude oil. And we talked about this towards the end of the week. I think it was Thursday, talking about, well, there's going to be an OPEC meeting, so that probably will help the Canadian currency because they're already expecting, and I think Russia had already agreed to cut. And now it's some news that it's come out early Thursday morning. So let's take a look here on the daily. Good support right in here. It's at 31.89. And they may try and want to defend that 31.89. Let's call it 31.87. So go with 31.87, mark that off in the daily. Certainly here on the upside, that'd be 32.76. I don't think we're going to be anything close to that coming up here. So let's go and move into the 2-hour chart. And there's that key 32.02 area here. Resistance. Remember how important 32.45 was on the way up, and we adjusted this here. The resistance then, you can see this, close right there, 32.56. That's going to be a resistance right there, 32.56. That's your risk level. Looking at overall, still bullish, but if you're looking at this on a trend line, certainly you'd be breaking this area here. So it's at 32.56. Any moves back to 32.56, especially with crude trying to put in a little bit of bottom. We do have OPEC meeting coming up. We want to be faded, and that's where they'll try and run back up if we see a pullback here in crude. We've seen a slight pullback here. Not a whole lot, but this whole area right down here, that 52.29 is where they've broken out of. That's still a good 65 cents away almost. As far as the support, %, comes in at 31.39, and I like that area here right there. You see these touches coming across, so I like that 31.39. Eventually we may get there, but in the short haul, we know that 31.87 pretty key on the close on daily. But that certainly looks like a good target for them to go to. And let's go and move on to the dollar Swissy. Be just a moment. if we can make a run up here, it's going to be par 34, and it's just a straight up level. I don't even think, I'm not sure that would make it up there unless we just goose some stops right in here, but it's going to be par 34. And certainly still range bound activity. And on the downside, for right now, right there, 99.22, 99.22. But as we know, this market's been pretty much been doing its own thing, and with the occasional quick dip, for the most part, trading very tight ranges. So once again, 99.22, nothing I'd even be interested in whatsoever, but 99.22. As I mentioned, it's par 34, so relatively tight. And let's go on now to the dollar yen. This is still holding up relatively well. Let's take a look at this on the daily. Right there, 1384. That's going to be key. 1384, right there. We'll call it 86, 1386, 1386 on the daily. And that's going to be the support, the resistance also here on this 2-hour chart, 1386. There we go, 1386, which will be the resistance on the 2-hour chart as well as on the key daily. Now for support. If they want to break them here, this is where they want to go to, 1309, which isn't even that far away, but it's going to be 1309. That's where we'll probably see, we take the dip, see a bounce from that area, but be 1309. If you remember, actually, this is the area we broke out of. Remember, this was last Monday. We were talking about this moving higher, and we said if we can get above this 1308.5. We just started to break out of this after the Thanksgiving day, and I said it was all about 1308.5. We called it 1309. Well, then that's where they want to go to. We'll just call it 1308. It was 1308.5. Trade relatively quiet. Now let's go move into the dollar index. Well, remember how important this was, this 97.14 on the daily. And we finally, look at this from here. And we took it out that one day, but we lost it the next day. And so on the daily, that's going to be the key area here. Well, actually, you have a little bit of a nudge here, but I think it's all about this 14, this 97.14. You can look at other areas here. But when we jumped up, we quickly lost it. You can see where this body engulfed. Then we took a dip. Then we came back up. Going into the G20, that was certainly the risk and also end of month. But I think it's this 97.14 on the daily that you have to focus on. And there it is. On the downside, it's all about right here. It seems like it's a long ways away, but that's where it's going to be very key here, and where they want to work towards if we're going to pair back, which is 96.20 on the daily for support. Now let's go and move into the 2-hour chart. Well, if the euro does come down there into the lower 13s, and this is where, it's actually a hair below, which is 96.27. This is that big level though, 31. So this would be your risk to gauge against. So it'd be 97.31 on the upside. Testing right in here, that 97.07. But this is your risk right here. Once again, like I said, Powell's already eased back a bit from pedal through the floorboard to, I guess, pedal to the metal. But I think this gives an opportunity, I think, looking out, and that's one of the reasons I didn't want to just jump in, just do Asia analysis based on how we opened on the Sunday session. But I think that you wanted to go and digest these moves. And now as we move into the U.S. session, that's where I think we're going to kind of give a decision as to what are we going to do. Well, certainly when we look at cable, it certainly looks like it just wants to continue to go lower. And that's going to be supportive for the dollar. Once again, I don't think it's going to fall apart or anything. But I think this gives an opportunity as we come in the New York session for some traders to maybe lighten the load. And from there, maybe we can start to work a little bit higher in the euro. Obviously, Aussie and Kiwi are already doing great. But I think that's how it may go and start to play out. We'll look at it, like I said, from a technical standpoint, but I don't really see the dollar making another big move. We've got that little truce that's good for 90 days. Well, there'll probably be some banter going back and forth that'll, cause some moves. But for right now, it's good news. The market's going to look its risk on. I think this gives an opportunity for those to lighten their load. And that lighten their load may be enough, like I said, to get us down to probably around this 96.45, actually maybe as low as 96.32 for starters. But I think that from here it's going to be, there isn't a real impetus to go and move us higher. And Powell's going to be talking, and after he eased back, I don't think he's going to come in and turn around and change things very much. Now for support. It's really going to come in right there. I mean, you can have some, we know 86, 84 area has been very, very key, but before you get a little bit of a more of a bounce or whatever, I think you can come, you see right here, I'll show you right there. Oh, actually, we've already made that rundown, which is 96.62. So allow them to gain some, hit some stops. Look at this high right here, and look at this body touch here, 96.58, 96.58. So that would be the target if we start to slide, 96.58, your initial target. I don't think we can actually call that bearish. We'll go with the range for right now. We'll have to see how we get past today. But I think that this gives bulls an opportunity to start to lighten the load. Because that, it's no guaranteed outcome, but I think that that's how you want, at least for me, how I want to look at it and see how the market reacts. If we can get the euro to push a little bit lower, what kind of a price action do we start to see? Do we still look like the market is trying to defend itself on the way down, i.e. the euro? Same thing with the dollar. Is it having a little bit of a tougher time? I think this probably wouldn't necessarily even be as strong if it wasn't, the cable's so weak. So, like I said, we may just start to ease back a little bit. Maybe a little bit of a medium slow move, but I think that's the way we're going to want to look at the market once we get as we move into this New York session. Taking a look at gold. Well, we talked about this. We made this run up here in the gold to this 1237. We talked about that being a target, but that was on the December gold. And remember, February's trading at a $6 premium to December. So this is basically like as if it made up to 1233 when we think about the December, because we spent a long time with the December gold. So 37 would really equate to where it would be here at 44 for this. So we still haven't reached our target, which is 1237 in the December, which would equate to 1244. So we're actually going to keep this target here on a very short-term basis. If the dollar was to strengthen a little bit, on a short-term basis, we'll be right there, 1240 on the February. This equated to that 1237, so we'll go with 1240. Support. It's going to be right there, 1224. If they want to let them slide a little bit, 1224. And we'll move into the 30-year bond. It's going to be right here at 39.25. I really don't have a good take on this bond at all. The numbers have been fairly well, but the bias chart numbers, but I don't have a feel whether this thing wants to. I would think we'd want to ease back a bit, but for right now, it's going to be 39.26, and this level right here, 40.24. And let's go move into the bonds. For right now, it's going to be right there, 61.46. Things have eased up a little bit with the whole Lilly thing, but still some pressure there. And that's going to be support, 61.17, right there. Moving into the DAX. Come down here to fill in this gap area here. It's going to be right there, 14.12. And on the upside, well, 11.412, keep calling 14.12. Right there, coming across, 11.550. I'll move this to range. See the euro holding up fairly well right here. We did come down here and we filled this gap here at the 13.20. Look at that. We talked about that actually from the Asian session and mentioned earlier in the European session. Say fill the gap, trying to work up a little bit higher. See what the dollar index, like I said, I wouldn't be surprised if the dollar index just continues just to slide here. So we'll see how it goes up. But I think that's the way to look at it, is for the dollar to start to ease back now. We've gotten past what the risk area would have been with the G20. Here's the bias chart. We'll get that posted. And thanks for joining us here on the European crossover.